Does health insurance confuse you? It did me as well. Stay tuned. All right, guys, this is going to be the beginning of a video series I'm going to do on different health insurance topics. So we're just going to call it Health Insurance Basics. But what it is, each video is going to be a bite-sized piece of content to help you better understand how health insurance works. So this first one's just going to be on different health insurance terms. We're going to talk about premiums, copays, deductibles, co-insurance, and max out-of-pocket today. So let's get started. So the first thing we got to get out of the way is premium. So believe it or not, some people don't know what a premium is. Pretty simple. It's what you got to pay for your insurance company to cover you. So in this example, we got a $300 premium per month. So got that out of the way. Our next term is copay. So copay is kind of an often misunderstood term, but for the purposes of this video, what I want you to understand is it's what you pay to see your provider. And say you didn't have health insurance, you may pay $150 to see your primary care provider and $300 to see a specialist. But with insurance, you're gonna have let's say you have a $20 copay to see your primary care and a $40 copay to see a specialist. So we'll get into copays deeper in another video. But anytime you pay a copay, that's gonna come off of your deductible. So if you pay a $40 copay, it's gonna go toward your deductible, so then your deductibles would be $49.60, for example. So what a deductible is, it's basically what you have to pay in the event of something major before the insurance company starts to pay as well. So think of it as what you got to pay before the insurance company's got some skin in the game. So for example, let's say you have a big surgery and your bill comes out to, let's say generously, it comes out to $15,000. So the first thing you're going to have to do is pay your deductible towards this bill. So pay your $5,000, it's going to take the bill down to $10,000. Now, mind you, if you work with a broker like myself, I've got ways to build plans that really makes this deductible a lot less relevant. So a lot of times you won't even have to pay it, but we'll save that video for another day. But in this example, you've paid your $5,000 deductible towards your $15,000 bill. Now you got $10,000 left. So what that's going to bring us to is our next term, which is co-insurance. So co-insurance is how you and your insurance company agree to split the costs between your deductible and your max out of pocket. So your max out of pocket is exactly what it sounds like. It's what you pay. It's the maximum amount you pay out of pocket. From there on, your insurance company is taking it. But in between your deductible and max out of pocket, co-insurance comes into play. So for this example, let's just say you have an 80-20 co-insurance. What that means is the insurance company is going to pay 80%. You're going to be responsible for 20%. So out of this bill, if you've got a 80-20 co-insurance and you've paid your deductible, that means you're going to have to pay 20%, not the best writer, but 20% of this $10,000 until you reach $8,000, which is your max out of pocket. From that point on, your insurance company is taking it from there. So I don't know how much that exactly is, but you get the picture. You're going to pay 20% of that $10,000 until you get to the $8,000. Remind you, you've already paid $5,000, so the max you're going to pay is $3,000 more. So that's essentially how this works. Now, as you expect, if we'll go over here, the lower your copay is, the higher your premium is going to be. The lower your deductible is, the higher your premium is going to be. The higher your co-insurance, the higher your premium is going to be. So for example, let's say you had 100-0 co-insurance. Well, that means from deductible to max out of pocket, on this bill here, that $10,000 left, the insurance company is going to pay 100%. So what that really means is your max out of pocket is essentially $5,000 because you've got a co-insurance of 100-0. Now, again, that's going to raise, your premium, but hey, still, it kind of depends on how you use your plan. If you use your plan more, you might want to get a higher co-insurance and pay that higher premium for it. So that's just some basic health insurance terms. I hope that kind of clears up some misunderstandings and makes health insurance a little bit more understandable to you. I mean, if you can understand this right here, then you understand probably 99% more about health insurance than anybody else does. So that's great in and of itself. Next week, we're going to talk about networks. So if you've ever wondered what on earth those three little letters mean on the back of your card, EPO, HMO, PPO, stay tuned for that. We're going to go over that. I'm going to make that a lot more clear. So, all right, guys, see you in the next one.